Sponsored by Texas Bank and Trust.
From lower gas prices, potentially larger tax refunds, consumers have some glimmers of hope on the money front in 2026. But post-pandemic financial pressures took a toll on credit scores. Karen Capa joins us live with a look at those numbers and why they matter. Hi, Karen.
Hi there, Brennan. You know, consumers have become more anxious about paying down their debt and also their ability to acquire more credit. That's according to a recent survey by the New York Federal Reserve. Missing payments can lower credit scores and hike interest payments, but experts say there are some things to do to turn that around.
The Federal Reserve Bank of New York found Americans haven't been this anxious about missing debt payments since the early shock of the COVID-19 pandemic in April 2020. Consumers still feeling squeezed by elevated post-pandemic inflation and debt that came with it.
It is a challenging time, but it's important for people to understand that they have more power over their money and over their interest rates than they think they do.
LendingTree recently analyzed records of 100,000 users with exceptional credit scores of at least 800. They found those consumers averaged $171,553 in debt, including mortgages, up 14.2% from October 2022. Despite taking on a bigger burden than a few years ago, those borrowers paid their bills on time every month. They kept credit utilizations low, averaging just 5.5% of available credit, and limited inquiries for new credit, averaging just 1.7 over the past 2 years. All key elements, Matt Schultz, LendingTree's chief consumer finance analyst, says, leading to a higher credit score.
It doesn't even have to be perfect credit. It doesn't have to be an 800 credit score for you to basically have an awful lot of options when it comes to credit cards, mortgages, personal loans, on down the line.
And in an uncertain labor market, improving a credit score could improve chances of a job or promotion. Only 11 states have laws on the books prohibiting the use of credit reports when making employment decisions, with exceptions for some roles.
And consumer debt has been more expensive in recent years as the Federal Reserve has kept its key benchmark interest rate elevated in an effort to curb inflation. They've been slowly bringing it down in recent months, and they will make their next decision on where interest rates go next week. Brennan?
Alrighty, Karen, thank you.